Welcome to Second Take, the show that focuses on the issues behind the news. Precious metals company Sibanye-Stillwater and gold tailings retreatment company DRDGold are coming together to create an industry-leading surface mining partnership. Mining Weekly editor Martin Creamer has the details. Welcome, Martin.
Thanks, Sashnee.
Can you tell us about this proposed partnership and what it will entail?
Well, this was Neil and Neil creating a good deal. So we've got Neil Froneman, who's with Sibanye-Stillwater, and he's also got international exposure. And it was Neil Pretorius with DRDGold. And both of them have, been very deeply involved in the gold mining situation. Of course, more recently, Sibanye-Stillwater under Neil Froneman is also very much into precious metals because he's in platinum. But one of the things that DRDGold has been building up over a decade and more is to be able to turn dust that we throw out from mining into gold and into money. And this has been a wonderful pursuit of this company that I can remember when I went out to Ergo, which is the machine that they use to turn this waste of the gold dumps back into gold and into uranium if possible, also sulfuric acid if you can. I remember Mintails, the Australian company, toying with the idea of stripping those assets. Can you imagine if they have stripped those and sold off the steel and everything? What a loss that would have been. We've now got DRDGold, in a decade of taking over an 80 million rand asset, which they valued at 80 million at that stage, now having a company which is worth on the stock exchange, 2.2 billion and able to now get a foothold into Sibanye's big project out on the West Rand. So Ergo's out on the East Rand. The ER stands for East Rand, gold with a G, gold operation. But on the West Rand, there's also an enormous amount of what we call tailings. This is waste. And they take that waste and they turn it back into gold and turn it back into uranium. You can see in this deal, Neil Froneman, that is, he's held back on the uranium. He's bullish on uranium in the future. So the Cook operations they've held on to, this is not part of the deal. But what goes into this is rich Driefontein material. Because, my dad used to work on the Driefontein mine. They weren't too concerned about how much gold they left on the dump at that stage. They would just have quick production throughput, and their methods, because that mine was so rich, they used to get a good gold bar out of it. And if they left more gold than you should on the dump, they weren't too concerned. So there are two very rich dumps there with a lot of gold in them, and 35% more gold than you get out at Ergo. And now the deal, if the shareholders approve it, and I think they will, because we saw the shares of Stillwater, well, I should say Sibanye-Stillwater, rising yesterday. They rose quickly and sharply, which indicated that the shareholders were happy about this, because it doesn't involve any capital raising, but it quickly puts a value of 1.3 billion rand into the pocket of Sibanye immediately, and they've only dispensed with 38% of the operation there. So they've been talking about this West Rand tailings retreatment project for some time. But they came to the conclusion that, why reinvent the wheel when you've got Ergo plant perfecting what you should do? And, with their technology, it's been well honed and they have had their problems. Why not let them do it and join with them? But of course, you have a Sibanye which has got this mentality of we don't hold minority interests. So they had to say over 2 years, we want to control DRDGold, and that's you must agree to at the outset. If we decide not to, that's fine, but we must have an option to get 50.1%. Now, why they want to do that is because they see big international opportunities, not only in gold. And they didn't want to mention the metals, but they're probably in platinum and also in other metals. They see an opportunity to take a waste dump and wave the magic wand and get that metal out at a good return across Africa, across the world. So that's why they're keen to cement the relationship now with DRDGold.
Now, the transaction will also increase DRDGold's gold reserves from 2.99 million ounces to 6.81 million ounces.
So it's a fantastic deal for DRDGold. You saw their shares went up in the morning and then slightly off in the afternoon. Nothing to really worry about. And because this gives them a richness that they haven't had on the East Rand, but it gives them a volume. It doubles their volume. So it doubles their horizon here on the local front. And we also mustn't forget about the environmental benefits coming out of this. You know, I lived out in Carltonville area for a while. My dad worked on that mine for a while. And it was the rich Driefontein mine. But people out there used to cry their eyes out because there were wonderful market gardens there. And the richness of the soil is fantastic. And it was bombastic of the government and the mining industry to just steamroll into that area and say, mind out the way. Because the agricultural potential is huge. Now, what can happen is we can re-win that agricultural potential, because we can get rid of those dumps, clear them away, free up the ground now for agriculture, and also realize that there's a lot of impacted mine water there that can be used. And we saw gold fields out there, you know, under Chris Thompson. He was the CEO at the stage, and this Canadian leader said, look, I want to leave a legacy here. And he got this impacted mine water to grow big-headed, long-stem roses, beautiful roses. And he said, look, this is what I'm leaving behind. When these mines end, these roses will still be grown. And we know how big that rose market can be. We see the roses coming out of the deserts of the Middle East. And you know, sometimes on the freeway, you can still see these vans flying to the airport, you know, with these roses on them. So there is tremendous agricultural potential there. If they can clear up the environment, you can then get agricultural hubs going. And I've seen one of Sibanye's agricultural hubs out on the East Rand there. And, you know, the lettuces they were growing was so luscious that, you know, ShopRite Checker says, hey, give these to me. So it's a commercial deal, not as if it's a diversification for the mining industry. No, this is purely for the community. You start owning these industries, but in a way that they do agriculture in a modern fashion and make sure they've got a market early, and the commercialization can work.
Now, Sibanye also has the option to increase its ownership of DRDGold, as you've said. Can you tell us a bit more about this?
Yes, so, you know, this option is a 2-year option, and it wants to be able to say, over time, we can sell you more of this project, and we can get a bigger share. Sibanye-Stillwater, you know, wants to make sure it lowers its debt at the moment. So it doesn't want to go into big expenditures, which is the right thing to do. So it has this option, and if things really improve out there, which they could do, you know, this might even be a faster transaction. But you can see what they're doing is they're laying the foundation for a stake, and a controlling stake eventually inside DRDGold, which is then scanning the world market to see what else it can do. Because we see that they were big dividend payers, DRDGold. You know, last year they were the second biggest dividend payer on the stock exchange. And so you've got this dividend potential coming out of there. And at the same time, you know, when you go out and you deal with waste dumps, there's not a huge capital commitment. And we can see here it's 2.2 billion rands that will be needed, which is nothing to sneeze at, but it can be accommodated by DRDGold because it's cash flush at the moment, and because of its cash situation it can raise debt. It doesn't need to sell more shares on the stock exchange, which sometimes upsets the shareholders because they say, you lowering the value of our share, you're diluting it. Doesn't look like that'll be needed. It's a phased approach, a smart approach, and it seems that there will be this close relationship between the two companies going forward. But of course, nothing is certain. They've got the option. They've still got to get backing from their shareholders. But it's not as if they need approval from the Department of Mineral Resources. You know, these approvals have all been set in place. They've got their plans for a regional tailings storage facility. They've taken journalists out there on occasion to outline their plans, and so they've been working on this Sibanye-Stillwater for a long time. And at the last presentation of results by DRDGold, we quoted Neil Pretorius as saying he's ready to share his research and development because he's been working on this, incessantly for more than a decade, and it's reached a nice high peak, and he's ready to spread that. And then came this deal. Of course, I'm sure there was a lot of talking behind the scenes well ahead of this announcement, but at the same time, I think he's also reached a peak of research and development, ready to share. And I think that there will be companies that can engage this entity now in the world without sort of having to get involved. It's like almost an independent power producer approach where you bring in an entity that just does the job of taking the gold out of your dump and earns a buy-in or royalties, whatever arrangement they've got, but it can generate cash fairly quickly without much of a capital outlay. So it's going to be attractive.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashnee.
That's it for today. Join us again next week for more news and analysis on South Africa's mining industry.